presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. Good afternoon. Tommy O'Brien coming to you live from TFNN. We kick things off from Monday trading and markets in the green across the board right now. We're coming into session highs with the S&P up by 0.4%, trading up by 24 points right now, 59.40 in the S&Ps. NASDAQ 100, we're up by 0.7%. Above the highs of Friday, above the highs of this morning, up 142 points, 21,519. Dow right now barely in the green by 17 points. But yeah, you're talking about a Dow, solid 400 points off of the lows that we had at 10 a.m. this morning, and the Russell, positive by 2 points, trading at 2,071. And boy, we got some action in commodities. We got some action in yields. How about gold? $88.80 to the upside. That enough? 8 for you, 34.04. Gold right near session highs as well. We got up to this price point, 3,400, right as I was finishing up the show this morning. We breached 3,400. We've been chopping around, but we just made session highs. Gold up by $90, we'll call it. You jump over to yields right now, and we have the 10-year. A little bit of lower price, higher yield, -9 ticks. You see the slide from where we were 110.24 this morning. We drop about 10 ticks. We got a yield right now of 4.46 on the 10-year, 4.46 on the 10-year. The dollar, not so much, right? No bid there, man. 98.746. The dollar, we're going to talk about the dollar, Sal, man. Weakness, yeah, testing the recent lows. Recent lows up there, basically at the 98 price point. But boy, you take a look at that thing. Challenging the lows of April, and those lows at about 98. And boy, we're down from 100.54 on Thursday. You talk about a move, man. So as the dollar cascades lower, put it back to a 15-minute. No matter where you are in commodities, man, things are rocking. There's the gold contract, up more than $100 from where we were on Friday, up 2.7%. Silver is having quite a day, to say the least. Look at that run, silver, up by 5.4% right now on silver. Copper, giving back some of the gains, but we almost hit $5 on copper. Now, let's take a look at these coppers. Take a look at copper. Taking a look at the volume here on a weekly basis. Boy, that is quite a start to the week, man. Now, last week was a shortened week, but even the week prior, you only did 190,000 contracts. We're already at 57,000 contracts. It's Monday. And yeah, there you go. That's why. Those are 3 giant bars coming in of volume, right? Look at the rest of this chart. We got nothing like that. You had 10,000, 10,000, 15 on back-to-back. You've only had 1 bar going back 10 days that's been 15,000, so copper. With some volume at the highs, we had a little bit of a selling. This is a 4-hour we're looking at here. Let's put it back to a daily. Be nice if we could close above that 474. Yeah, maybe even 486. Yeah, 486, excuse me, or the high there where we opened 487. 487, 486, we're trading at 485. That's the top of that copper area. Take a look at some of the copper equities. Freeport-McMoRan. Yeah, geez. You know, you look at these and then you look at some of the other gold mining equities, up by 4.3% today. But if you're in commodities, man, you're catching a bid today with this dollar action. Southern Copper. And these are days that can be revealing, right? Imagine you're thinking copper's on a run. Southern Copper is just bouncing against the upper boundary of this channel line right now. We got a red bar on day like today, and you compare that to Freeport-McMoRan, which is a big copper play as well, and they're up 4.3% right now. You check out some of these movers, though, in gold, man. How about a Harmony? Up by 6% today. New Gold is bumping up against the upper boundary of this channel line for New Gold, up another 3% today. AEM breaking above. Check out this one, right? That's a weekly. You put it back to a daily. AEM just traded up 24% from where it was, almost a couple weeks ago, May 16th. And we are, again, challenging to actually break above that channel line. That's how you like to do it if you do. We got wide price spread. We got an hour left to go in trading right now, and we've already done almost 2.8 million contracts. That's more than we did on Friday. And you got 3.6 hanging out there from Thursday's trading on Agnico Eagle. Yeah, look at these equities, man. The tough part about it, okay, is that gold's having a run, but it's going to take some emphasis and some volume and some momentum to break through. I mean, take a look at... Wait, that's not it. Yeah, it is, isn't it? I have it in my own report, but I still get confused. This is Barrick Gold. Yeah, Barrick Mining Corporation. It still says Barnes Group, Inc. Check that out, right? On Thinkorswim. Come on, Thinkorswim. It says Barnes Group. No, that's Barrick Mining Group. Symbol B now. Up by 5.92%, $20.30. But look at this technical area you're coming into at 21 right now. Let's back it up even further. Whoo, right? We're coming right into the highs we had 2023. You got above there briefly, and we got highs out there again near $21. Point being, we're at the top of the range right now. Now, yeah, with the move gold's having... Okay, yeah, maybe 25. Maybe it's time to test 2021, 2022. Since April 21st, the volume just keeps coming in light. Now, this is going to be a different week, as I mentioned. We're getting a big start to the week right now. The weekly volumes on these gold equities, folks, are going to be important. Because if we come in light, we reject this area, put it on your charts, man. Barrick Gold. You're looking at about 21 out there, right? Harmony. Back to a daily, I'm going. About the 16 area, where we went April 10th. Look at the volume we had there, right? All these, let alone the cherry-picked high of 1877, but you're still going into this bar of April 10th. Huge volume on a daily. 13.1 million shares as you're trying to break above that area, and then you have that gap lower on 12.5. It's going to take some momentum for these equities to get above there with the run that they've had. Look at Harmony trading from $1.94 in 2022, let alone chopping around near $10 for the most part of 2024, and you're trading at $15.67. Yeah, similar action, right? They're all bumping up. It's been quite a run. IM Gold, top of its channel. You got 838 hanging out there from highs. Gold up $89. We might see 100. We might see 100 by the time I'm done. All right, folks, stay tuned. We'll talk some equities when we get back. We'll talk some tech stocks. We'll talk some bonds, some fixed income, and some dollar. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps up by 24 points right now. NASDAQ 100 up by 136. And as we're going to do, as we do each Monday at 3:15, folks, we're going to talk to our man, Steve Rhodes. Folks, if you haven't checked out Mastering Probability, hit that newsletter tab on the front page of TFNN. You can try out Steve's outstanding newsletter. You get some awesome webinars in there when you sign up, folks. You get a 30-day money-back guarantee. Check it out. Some great work from Steve, and look forward to seeing what we got going on. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing this afternoon?
I'm doing fantastic, man. How's your week starting off?
Well, except for the, we've moved clearly into summertime weather over here. We've had a couple of super soakers. There was one that just went through a few minutes ago, so I'm glad that kind of has ceased, because the internet can kind of get a little unstable when we get those big storms. But other than that, I'm looking forward to hockey resuming again on Wednesday night. I know, our team down here beat your team over there. I'm good either way with whichever Florida team is in it. Just glad that we've got the Panthers in it against Edmonton. And, for those folks out there that maybe don't, watch hockey or what have you, I just suggest that you tune in to hear the national anthem. First game's going to be in Edmonton, and so you'll hear both the U.S. and the Canadian national anthem. And Edmonton really knows how to do it. It's just inspirational for everybody, quite frankly. So that's going to be Wednesday night. I'm looking forward to that. And,
I love it. I learned something already, Steve. I got to love it. I'm serious. Wednesday. And folks, if you haven't watched, how about it? I used to hear you talk to my dad, of course, Steve, and it'd be playoff hockey, right? Boy, there is nothing like playoff. You haven't seen hockey, folks, until these guys turned it on in the playoffs. It is playoffs, but man, remarkable.
Yeah, totally. And we have your dad to thank for this. I know there's only one person that could have pulled off this deal, which was getting Brad Marchand to move from Boston over here. Okay,
Crazy,
I hated him. Right? I hated playing against him because he's so good. Maybe a little tough, but he's a small guy. Reminds me a lot of like your dad, how your dad might play hockey. And
I love it.
But having him as an addition to the Florida team it's just been miraculous. I don't know how these teams hold all these guys together, cap-wise and so forth. But
Seriously.
it sure is fun. We're going to see really probably the two best teams anyways in the NHL playing in the playoffs. And I hope it goes to Game 7.
You got me excited now, man. You got me all jazzed up about it, and I was anyway. And hey, and the Bruins, now they get a first-round pick on top of it, man, because the Panthers did so well. So kudos at all, right? They do so well that we end up getting a first-rounder, which, for Marchand. We got quite a market going on, Steve. What do you think, man?
Well, so you were talking about gold equities. Let me talk about just gold itself and show folks what's going on here. So this is a monthly time frame chart. Some of the tools that I use, this got all the tools that I use to help identify tops and bottoms. One of those tools is referred to as the TD9 count. And the TD9 count requires it requires each close of each bar on a way to move up, that the close of the current bar has to be above the close of the bar 4 bars earlier. So it's a great tool, and it's kind of like, this is how the stock market runs a 100-yard dash, and I don't know if you were a runner in school or what have you, but even when you watch, the professionals after the 100-yard dash, some of them, after that 100 yards, they're hitting the deck because they've used up all that energy. And that's in essence what this pattern is like. Well, on a monthly time frame, I've got a couple of blue arrows. One takes us back to the 2011 top. That was a TD9 count pattern that formed that high. Back in the 2020-21 time frame, another blue arrow, that was a TD9 count top. And we had another one that formed out here in April. So not until that high gets taken out, and that high will be 35.39.30. That's from the August contract. So that's what I want everybody to really be paying attention to. Like you say, maybe we get $100 today, maybe it's $100 tomorrow. We could be up to the 35.39 level in just a heartbeat. Now, if you look at the bottom panel of this chart, identifies consecutive higher closes. Those would be black digits, and consecutive lower closes. Those would be red digits. Now, in the month of May, we closed just slightly below the close from April. So that gives us that one digit, if you will, to the downside. Typically, in bull markets, the most bullish markets, you'll see either a 1 to 2 bar, what I refer to as a knee-jerk reaction. And if we take a look at really coming off of the if we take a look at the lows back here in 2022 out there, you can see that every pullback has been no more than 2 consecutive moves to the downside. Well, the question was last month just and today, right? It's first day of June. Are we going to move lower and have a 2-bar move to the downside? And I would suggest that if we start trading above the May high out there, my answer to that question is probably not. When you can trade above a prior day's high, a prior month's high, a prior year's high, those are bullish signals. Now, you have to be able to identify whether there's a top or a bottom pattern out here, and that requires, in this case here for the monthly chart, for gold to get above that 35.39 level out there. But if it's only a 1-month move to the downside, that would be telling me that we've got a real significant rally unfolding, real significant, like the type that would take out these TD9 count patterns. So that was just a monthly chart. Here's a yearly chart. On a yearly chart, we can see we're well above last year's high. We're also in bar number 9. Now, the last time that gold made a significant high out here on a yearly basis, it was a TD9 count pattern. The TD9 count pattern, Tommy, the high or low, in this case here we're talking about highs, has to occur on bars 8, bar 9, or the bar following bar number 9. So it may not be really until next year that we get that significant high out there, especially if we see the monthly chart negate its TD9 count pattern. Turns out that the weekly chart, now I've got the August contract, so the two charts on the left-hand side are the continuous contract. That's the only way for me to get enough data to be able to show where we're really at in the TD9 count sequence. The next 2 charts, Tommy, you got the weekly for August and the daily for August. The weekly for August has a TD9 count top. So just like the monthly time frame chart, if price closes above that 35.39 level, that pattern gets negated. So it's really an important chart to watch. By the way, August contract has resistance inside of gold at about the 34.19 level. So if we close, well, this snapshot was taken maybe about an hour or so ago. I don't know exactly what we're trading the August contract, but any weekly close above 34.18 is going to suggest to me that we go for its all-time highs out there. And on a daily basis, if we get a close today above 33.95.30, we generate a small A to B equals CD pattern that takes us back to the all-time high. Any questions about what I've shared so far, or any of the information on these charts here?
No, I love it, man. I love how exact you are with all these levels. I know that's how you deliver for your newsletter subscribers, but I love it. Gold's having quite, this is, and boy, those longer term charts, those TD9 counts, I'm watching. Yeah.
And I've been suggesting caution to everybody out there because of the way that things had lined up, and we did see a little bit of a pullback, but nothing of real significance out here. Another thing that I like to do, Tommy, is to take a look at how gold is moving in all major currencies. Is this just a depreciation of the dollar, so to speak, right? The dollar moving lower. Is this just that offset, in that conversion, or is this more real? So what I put on here is you'll see some trend lines. The charts that don't have the trend lines, the only reason they're not on there is because they haven't really broken through a trend, if you will. But if we take a look at the U.S. dollar, that's in the upper left-hand chart, you'll see it's broken through a trend line, at least as of an hour ago. Same thing in terms of euros, same things in terms of Chinese yuan, same thing in terms of Aussie dollars. We're moving high in all these currencies. We're also moving high in all of the Middle Eastern currencies out there. This rally is really, and if you take a look at what's going on over in the Middle East, we're breaking all kinds of descending trend line levels out there. So it looks like gold, to me, wants to continue to rally.
I love those currencies, man.
At least test those highs. Yeah.
I love it. I remember when you were doing that during the days when, everything, gold was at all-time highs in almost every other currency. I remember it, man.
That's right.
Great stuff, Steve.
Right.
Thank you for the information, man. We look forward to the program tomorrow. Have a great one.
You too. Bye-bye.
Thanks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have markets right near session highs. Gold right near session highs as well, up $88. Great stuff from our man Steve Rhodes. Jump back to the S&Ps, and 59.42. One-way trajectory, higher all day. And folks, Steve has an outstanding newsletter, okay? And the coolest part about it is that you get so many awesome webinars as part of your subscription. And so I encourage you, sign up for Steve's letter. You get it risk-free with a 30-day money-back guarantee. You get his newsletter for 30 days. You gain access to all of these webinars. And part of what, Steve's talking about, the TD9 setup, you get a whole webinar on it, folks. Okay, I just went in, and you're talking about, you get that, you get many, you gain all of that when you sign up for the newsletter. You get the newsletter, and if it's something that doesn't fit your trading style for whatever reason, you can cancel, get a 30-day money-back guarantee, but I know that you will get a tremendous amount of value. And if you had any questions about what Steve was going over there, sign up for his newsletter. Go do it right now, and you'll get all those webinars, and you can be in there checking out that webinar right now, covering all that, which is pretty cool. And how about playoff hockey, man? Wednesday night, Edmonton. Again, you get the Florida Panthers representing the United States of America against Canada in the Stanley Cup Finals. Gotta love it, man. I'll get a picture up of Tommy. I will after next break. We've done some skating. If you're ever looking for, I've said it once before, folks. If you're looking for, and Florida, we're very lucky. Like Steve over in the East Coast, they have the Panthers. We have the Lightning. No matter what, hockey is taking Florida by storm. So we have a lot of great rinks in the area now, but one of the best that I like if you're in the Tampa area is the TGH, which is the Tampa General Hospital. They sponsor it, I believe. TGH Iceplex, all right? And one of the coolest parts about this is actually where the Lightning practice. Yeah, so they are the official practice facility of the Lightning, and they're not there. I've never seen them there, actually, but you can actually find out when the Lightning practice there. They'll let you know, and you can come watch the games. It's one of those rinks that has 2 or 3 rinks in there, at least 2 full-size rinks. So multiple practices going on. They rent tons of skates. Okay, there's that good old rink there. TGH Iceplex, but I've started taking Tommy there. We're going to get him ready, man. 4 years old right now, perfect age. We got him skates. We got to start getting him some pads, so he can really start having some fun. That's what I've been telling him. Once you get pads, you're all set, right? Then you can just learn by falling. Nonetheless, hockey, Wednesday night. Okay, jumping around to what we have going on in this market right now. Yeah, check out this one. So I didn't cover this one this morning, but boy, you talk about some outlier risks in certain pockets in the market. You have a small ratings agency talking about private equity, okay? I know, 4 years, Jim. 4 years in February, man. He's going on 4.5. Tommy O, the third. Time is flying, man, right? Crazy. So check this out. This company with 20 analysts, okay, is rating the entire private equity universe. Check that out, okay? In 2024, the business then based in a quaint 4-bedroom colonial graded more than 3,000 investments that were all destined for the same place, private credit. So what do you have? You got 20 people grading 3,000 private credit entities here, okay, with 20 analysts. That's it. Well, guess what? Everyone's saying, you know what? That seems a little bit worrisome, okay? They're an outsized player in the multi-trillion-dollar private credit market. Interviews with people familiar, okay? And this is talking about BlackRock, Carlyle have explicitly excluded the firm from the list of acceptable credit graders for some of their own capital raises. Okay? So what does that mean? Maybe they got a problem, right? It's the ratings that go along with everything. U.S. life insurers, private credit holdings, almost $1 trillion. Okay, I'm going to post this one in the Tiger's Den as a gifted article. If you're not in the Tiger's Den, folks, come check it out. And as they say, no one's predicting the replay of 2008, but guess what? Doesn't got to be that bad. Okay, private credit and the ratings that have helped them proliferate are coming for a test, right? The stress test, as they would say. And did you know that there's teams of 20 people out there grading the entire industry? And meanwhile, you have some of the biggest players out there, right? Don't use them anymore to rate themselves, okay? They bill themselves as the biggest ratings company in private credit. Time and time again, it's declared private credit completely sound. Not quite AAA, but good enough triple B. It's a great article, man. Because it's all about the ratings again, that allow everything to proliferate. And then if you're highly rated, where do you get put? You get put in buckets that are supposed to be reliable buckets, like U.S. life insurance private credit holdings, right? They want high-rated credit. And you may be coming for a test. And it's pretty remarkable that you're talking about a team of 20 people are grading the entire area, right? So I'll post that one. All right, we jump around to this market. Amazon climbing almost 0.9% today. We jump over to Apple shares, up by about 0.3%. Yeah, BioNTech up almost 20% on their deal with Bristol Myers Squibb. And, you know, if you didn't catch the show this morning, folks, now watch out for these two equities, man. And they talk about how Pfizer did the same thing, basically buying a Chinese biotech. Go take a look at these two equities, man. The two of them, right? They're trading, Pfizer's trading where they were 28 years ago. And Bristol Myers Squibb is trading where it was 28 years ago. Okay? And the two of them are now paying tens of billions of dollars for the next cancer drugs. But I'd be highly skeptical that that's going to turn these businesses around when the chart looks like that and there's no bids whatsoever. And if that's the way they're going to grow, they're going to be paying for that growth. And how do you gain the multiples that you're searching for when you're competing and paying for those types of products in that degree? Oh boy, it's a lesson about diversification. When you think about a company like Pfizer, Bristol Myers Squibb, and you break even over a 28-year period that has seen the S&P go from 800 to 6,000. Gold sitting at 34.04, thinking of those critical levels that Steve was talking about. We'll see we finish out the session. Keep our eye on yields. And the dollar. Yeah, we're challenging the lows right now, man. We got a dollar trading at 98.69. Lows out there at 98.61. At about 10:30 this morning. All right, folks, stay tuned. We'll come back. We'll talk some equities. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. And digging into this last part of this article, which I just posted in the Tiger's Den as a gifted article, the URL for those gifted articles is like a page and a half. But nonetheless, anybody can click on them. You get 5 a month or something like that, so I try and be selective. I mean, check out the number of analysts they have and the number of ratings that you're talking about, okay? In 2014, they had 10 analysts for 1,300 issues. And meanwhile, they've doubled their analysts to 20, and they've increased their ratings fourfold for the number of issuers that they're rating, okay? And last year, one company began missing interest payments a mere 6 weeks after they were bestowed a triple B designation. Folks, think about giving a company a triple B designation on their debt, and they're 6 weeks away from telling creditors, see you in court. What is going on in that entire industry if they are doing that? Man. All right. We jump around to what else we have going on. We're going to take a little bit look at price of volume coming into the daily. Been talking about this area in late February, and it's pretty remarkable. You still can't catch any volume here going into this entire thing. We're talking about June 2nd today, first day of the trading. You're only at 1 million contracts in the S&Ps right now, and as I've been mentioning, you were doing 2.5 million. You were doing 2.2 million on the low days. The lowest day within a 3-week stretch was 1.9 million shares. Okay, and we haven't traded 1.9 million shares since April 10th. Think about that. We went 3 straight weeks on that downtrend, okay, and I keep harping on it, but don't forget about it, man. We're into a wall of worry right now when you're at the top of this range, and the S&Ps are struggling to get above this 6,000. And why? Who's going to be buying above 6,000? And this is where, okay, I'm going to take a moment, folks, and I'm going to turn technical analysis into verbiage, all right? And when I say that, I mean the technical analysis told you that everybody was selling on this downtrend from February 26th to March 14th when you had sustained volume to the downside. If everybody, and I say everybody as a generalization, right? You had massive selling. Well, in order to trade above 6,000, you're going to need buying, right? Prices go up when demand is pushing it up higher. So if we have massive sellers from the 6,000 price point, that is going to take sustained volume to the upside, because if you were selling at 6,000 and below, are you the buyer above 6,000? No. Right? Somebody was making a decision, and yes, that can change after we have some clarity of the tariffs, etc., but we haven't seen that change with the volume yet. Okay? And that's where you take technical analysis, and that's why I believe in it. Because technical analysis is just basically putting on the charts what's happening when it comes to supply and demand in the marketplace. And yeah, as my dad would say, right? You go into the store, there's less people in the store, and what are they doing? They're paying more money for the same product. Well, what's been happening? You were trading lower in volume, you're coming into the store, you're doing it on less volume, and we're trading higher. But we can't get above that 6,000 in the S&P. And you have the same exact thing happening on the NASDAQ 100. Okay, we're chopping around right at the upper echelon. Who's buying above this price point? No one's buying above this price point right now. And it's probably not a coincidence that that price point correlates exactly to when we had this sustained level of selling from February 27th down to March 14th. Okay, and the NASDAQ 100, the lowest volume day there was 694,000 contracts. And we've only done that twice. Yeah, we've only done that twice. Yeah. Since April 10th. And you did it for 3 straight weeks. It's been a heck of a run. But we haven't had the volume. And so we'll see if we get it. A little bit of lower price, higher yield coming at you. And yeah, this dollar's real right now. Let's check it out. All right. We're within a stone's throw of the lows here, 98.612. And yeah, same thing. On a technical basis, we're building cause to break lower here, man. We had the lows of 2023, right at 100. We had the lows of 2024, right at 100. We've been down here for 2 straight months, right? That initial move lower to April 7th. Now consider this, okay? April 7th was the week of, is the week that we got the 90-day pause, correct? I'm not asking, it was, okay? Think about what the market's done since then. A huge recoil, right? No, we didn't get any recoil in the dollar. All we did is build some consolidation here, and we're now actually breaking even lower than that. So the trend is intact to weakness in that dollar right now. And yeah, I think that's going to be a wind at the back of the gold contract. But same thing. We get some big time volume out there, declining volume coming in here. So gold has some work to do, even if the dollar trades lower. Okay, yeah, you're going to have some action in gold. But that's a break, man. We're taking out the bar we had from last week already, and it's the first trading day of the week, and we got a red bar. I mean, think of what's possible here when we're barely through the close of Monday in terms of where the dollar can be as we're breaking decisive areas, man, right now. I mean, even if you just close here right now, right? You're closing before or below anything that we've seen. Yeah, how far are you going to go back? Since Tommy was turning about 1 year old. That's how far back you got to go to see where we are on that dollar. And guess what? If you break in there, there's nothing in the way of this thing. You break below 100, the next stop's 90. Period. That's it. All right, let's check out Tesla shares. Volatility down about 1.2%, but a good $7 off the lows. We take a look at Tesla. Another story of somewhat weak volume, right? You get the acceleration the week of April 7th. Ever since then, lower volume numbers. We do some big volume, 631 million shares April 21st, and then you do 580, 504, and in a shortened trading week, you do 423 last week. Yeah, we get a bit of a rejection on Amazon at 210, about 277 million shares. That also correlates to the high around the election on Amazon, that 210 price point. All right, let's do it. Microsoft might be the strongest equity in the market right now, Elo. Look at it, man. Whew. Yeah. The only thing is, you look at these volume numbers, same thing. Look at these volume. Nothing too crazy, right? In terms of you do some big volume the week of their earnings, April 28th. And as you inch higher, we get less and less volume. Last week, though, check this out. A shortened trading week, that was decent volume on 4 days. We did 87 million shares. That's a big number. I'll finish up Microsoft when we get back, folks. Stay tuned. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 22. Markets green across the board right now. And yeah, you check out Microsoft. Boy, you talk about a heck of a run. And Microsoft challenging for all-time highs where, you take a look at some of the other Magnificent Seven, not really pushing all-time highs. I mean, just real quick, right? You take a look at Apple. Apple's $60 off of the highs we had in 2024. You take a look at even Amazon from 242 to 206. Google, 208 to 170 out there. NVIDIA's inching forward. Yeah, only about $16 off of their highs, but Microsoft on a percentage basis, you're $7 away. You're like less than 2% from all-time highs. And you got volume a little bit, but this is strong, man. And you look at the volume out here that we have from last year, nothing too remarkable at the top, as in you could break above this thing with some real volume. Now, we get non-farm payrolls on Friday. Okay, we get wage data for the month of May. You get payroll numbers. You get unemployment, a big number Friday morning at 8:30. You get ADP private rate payrolls this week, Wednesday morning, okay, along with the other economic data, but those are the two data points. And yeah, Microsoft, though, I think this is the strongest equity in the market right now, which is remarkable, but that is the case. Put it on a 5-year weekly, and I was looking at this the other day. Let's see how this breaks this, if it does. But you break this 468, you want to see something. You talk about an A to B, C to D that brings this thing potentially up to $600. Now, you got to need some volume, man. This thing's on a tear. But just like you saw it with Google, okay, Microsoft, OpenAI, some of these services, like I was talking about last week with AI, the productivity gains from some of these services are going to make $250 a month seem like a bargain of a lifetime. And that's where you saw some of the action on Google last week. You gave it back. But I try and pair the fundamentals of a stock like Microsoft trading up to that degree. And hey, we're in interesting times in AI. Folks, thanks so much. Have a great Monday night. Have a safe Monday night. We'll see you tomorrow morning at 9 o'clock with the Morning Market Kickoff. Have a great one, folks.